we all know you as the founder of Vega Protocol, and I'd love to dive into that and more about it, but I want to keep that carrot at the end. I want to really know more about Barney and how Barney lived his life and what he was doing and how you even first heard about crypto. So my first question for you would be, where was Barney before ever even hearing about Bitcoin or any other cryptocurrency?
Yeah, I was working in sort of traditional finance, building and designing trading systems and risk systems and things like that. So sort of in some ways similar to what we do now with Vega, but in other ways very, very different.
Mm-hmm. And what got you into that finance industry? Was that something in the family, or you just found that trading, money is pretty fun?
Well, I mean, I sort of studied computer science and was interested in kind of, I guess, difficult computer science problems and difficult technical problems. I think probably in the UK, unless you got sort of specialist knowledge on physics or some kind of science or hard science or engineering, then probably one of the best places, certainly back in the early 2000s, where you could get involved in complex and difficult sort of computing problems and get paid reasonably well to do it and work with really smart people, was in finance and trading and capital markets. So I think I sort of gravitated towards London and finance and those kind of, that sort of work for that reason, really.
Mm-hmm. And yeah, I mean, obviously with financial trading, especially in the digital age, computer algorithms are a must and a need to use for that, especially because you have so much activity going on so fast, and every millisecond matters, which is amazing to me. The physical server locations are important for that type of trading, and I'm wondering, was that even in your wheelhouse of all right, we have to choose the correct servers for any algorithm you create? I was mostly on the side of sort of the sell side or the side of exchanges. So I was mostly working either with investment banks who are sort of operating trading platforms, or with exchanges like the London Stock Exchange, who were again operating platforms. So the customers of those systems were very much thinking those things and paying for co-location and all of that. But for us, it was about enabling whatever those customers needed. So whether it was the latency time between receiving a message and instruction to the market and actually processing it and responding has a big impact. So if I'm a trader, there's obviously part of it's I want to be located next to the exchange. The round trip time might take 10 milliseconds, might take a microsecond, depends on where my server is. But then if it takes me 5 microseconds to send the data to the exchange, but then the exchange doesn't reply for a second, then I'm more restricted in what I can do and how much many orders I'll place. And it's an interesting thing in that in the current way the markets are set up, that lower latency is an advantage which you can use to sort of exploit the market in a way. It's kind of the front running Flash Boys stuff. It's not clear, once you get below a certain amount of latency, probably even on the order of a few seconds, it's not really clear there's much social or economic value to that. It's really just sort of traders taking money off each other and off of other market participants. And it's one of the things that attracted me to crypto really was sort of the opportunity to replace this kind of zero-sum game with a bunch of rich people spending a lot of money to take money off of unsuspecting others with something perhaps a little bit fairer. Yeah, exactly. So when did you first hear about crypto? What, was it a friend or?
It was Bitcoin, and it was probably sort of online technical forums, things like Hacker News and the white paper for Bitcoin. And I think the first few times I ever ran the Bitcoin software, it's probably you'd run the software on your laptop and you would mine some fraction of a Bitcoin, and it was enough that you could send it and prove it worked, but none of it had any value. This was pretty early on, and so you weren't trying to make money, so you'd sort of not think about that really at all. And that was when I first heard about it, but it was probably Ethereum. I did do some Bitcoin mining a bit later, a little bit of mining with a friend and a gaming PC. It was almost just a sort of an excuse to buy a good, very expensive gaming PC. It's okay, well, we can play games, and maybe this thing will kind of pay for itself. Actually sort of did more than pay for itself, obviously. But also having a little bit of Bitcoin then when people were launching some of these first other sort of tokenized projects and ICOs, even pre-Ethereum launching, meant that you were sort of watching what was going on. And so I ended up investing a little bit in the Ethereum presale and in a couple of other protocols, most of which lost all the money, but obviously Ethereum didn't. And so really it was probably that kind of slight sort of weird tangent of mining through to investing into Ethereum presale and then starting to use Ethereum, its early builds and trying to see what all these smart contract things were about, was probably the thing that really hooked me in. The Bitcoin bit was kind of interesting, but it was really Ethereum and that experience that made me sit up and take more notice.
Exactly. And since you were always in the financial sector, it must have been pretty interesting thinking, like self-sovereignty of money, no governments, no banks. Was that something that was making sense to you? Is that like, this is the right way to go?
It worried me, I guess. Prior to sort of electronic money was non-electronic money, and it was always just a given that, like, if I had $100 yesterday, that I would still have $100 today, and that I could go anywhere and offer anyone that $100 for anything. And those things were not things that people questioned whether this should be allowed. It was kind of, you just had the money, and if criminals moved lots of money around that they shouldn't have, it was the police had to go and do their investigation. Like, no one had any sort of right to a surveillance system that could kind of tell how much money you had and try and look at what you were doing with it and block it. It was kind of, no one would ever imagine that would be reasonable. And then slowly but surely, you sort of, through the kind of the vessel of payment providers worrying about themselves getting sued for what they were doing and all these kind of things sort of stacking up and reporting requirements, slowly but surely we ended up in this kind of really extreme surveillance state when it comes to money, much more so than with the internet for normal sort of communication or content or encrypted messaging or whatever. We end up in this really, really weird place where technically you can still have your money and move it around, but most money and useful money now is often digital. So that was really sort of worrying to me, and being close to that and seeing it happen, seeing the reporting requirements, doing the training at banks on, there are tipping off rules. So if I receive $100,000 for you and you say, I sold the car, and I don't believe you, not only do I have to report that, but I'm not allowed to tell you that I'm reporting it. I have to keep it quiet. I have to just go and, sort of tell people to start investigating you and not tell you that. So it's really a little bit weird and scary. And so that side of things, when Bitcoin and stuff came along, it was kind of okay, well, if we could make it so we had all the benefit of electronic money with none of the downsides of it having to be centralized around kind of surveillance and control, I think that would be really good. So that was definitely probably one of the things that made sense to me in terms of really the internet of money, because the internet was very much if I want to communicate with you anywhere on earth I can, and no one can stop me. And I obviously very pro things like end-to-end encryption for that reason, but that made a lot of sense to me, and definitely a big part of my reasons for going in.
Exactly. Yeah, I can imagine, especially in that industry, it's just, this is disruptive. If it works, it's going to really change things. If it doesn't, then whatever, another technology just comes and goes. And I can imagine your colleagues and friends that were, I'm sure they probably were aware of it too. They must have been, discussions by the water cooler of what would happen if Bitcoin did succeed. Should we start moving our money into there? Should we go into businesses with the crypto industry? So that must have been interesting.
Yeah, and I think a huge number of people even quite early on in finance, started putting bits of money into this. And, probably even many people who tell you they don't like it, they don't like the scams, they don't like the crypto bros, whatever. A lot of people complain from a position of extreme privilege because they're in a stable-ish financial system within the country they live in, but also because none of what's bad is really targeting them. But those people who complain, I wouldn't be at all surprised to find that most of them have put something into crypto, probably not their life savings, but certainly I think, especially if they're in finance, a lot of people were very interested in this. Most people, a lot of people were pretty predisposed to this. I mean, if you're talking to maybe CEOs or lawyers, they maybe think it's a nightmare. But if you talk to traders, I mean, traders traders used to be able to do whatever they wanted. They used to sit in banks trying to make as much money as they could, trading on anything, and then you had the financial crisis and lots more rules, and they got sort of shut down. They stopped having as much fun as they were having, and it's probably for the best that they stopped being allowed to have as much fun because it was a bit disruptive at times. But yeah, they moved from they moved from banks to hedge funds, and a huge explosion of sort of hedge funds and smaller funds which could get away with doing more and allowing the traders to have more fun and do more creative trading because they have less systemic risk. Like if you're just going to blow up a few rich people's bank balances, no one really cares. If you're going to blow up the global economy when you get it wrong, everyone sort of cares. So it sort of moved to funds, which I think is safer, but even then there's still lots and lots of rules and regulations. And so I think one interesting thing is that the traders among the finance system have probably, for the most part, really liked crypto because it lets them go back to having fun.
Exactly. What's Wild West now? So then you were saying also how Ethereum was a real, key point in kind of finding that, money can be programmable. You can actually do more than just use it for financial means. Well, at what point were you telling yourself, okay, I'm moving from traditional finance to crypto finance, and I guess leaving your position to pursue that?
Yeah. The interesting thing is Bitcoin on its own, it's not useless, but it's almost useless. And what I mean is, like, if you think that what you want is this decentralized money, if you think that you'd like digital cash, and if you think that those kind of surveillance things are bad, it doesn't help you very much if you just have Bitcoin, because like most of finance isn't money, right? Most of finance isn't cash. Most of finance is like lending and issuing assets and trading those assets and, taking out different types of insurance contracts and derivatives contracts. Like finance is huge, and some of it is payments and moving money around. But even then you pay it into bank accounts and you have to pay taxes. Like there's so much that goes on that if you just replace, pounds or dollars with Bitcoin and don't do anything else, then all of the surveillance will still be there, because all of finance, the rest of finance will be surveilled, and you'll have to engage with it when you get a mortgage or borrow money or have a credit card or whatever else you do. So it sort of seemed to me like Bitcoin was an interesting experiment and useful on the edges. It's kind of like if you were in a very corrupt regime or something, maybe you could use it to exfiltrate money from that country or whatever. But it also didn't seem like it was going to be world-changing for the rest of us because of that. And, as Ethereum kind of started to demonstrate that you could make these sort of programmable contracts, and at the time, when Ethereum got announced, there was Nick Szabo's writing about smart contracts as well, and Ethereum's announcement, and there was another, it was called something like Mastercard. There's a few others that, some of which I put like $1,000 worth of Bitcoin into as well, and all of those failed really. There were a few things going on that were trying to build this like computational layer, and people started to think about the idea of things like decentralized exchanges. And there was a time when I was in finance where I wrote a sort of presentation of like what parts of finance could we decentralize, and sort of this was after Ethereum launched. It was kind of like, yeah, we probably can't really decentralize most of it because Ethereum is not very fast and it's quite expensive in terms of transaction fees. And that was sort of where I stopped. And then I ended up leaving finance anyway. It's sort of decided that getting more senior would make my job more boring, and decided to try and start a company doing sort of micro subscriptions and micro payments. Initially not using cryptocurrencies or anything. And while I was doing that, I met Ramsey, my co-founder at Vega, and sort of we started talking, and he was friends with some researchers who had been researching kind of proof of stake and bot blockchain performance and a bunch of other things. And he was really talking to him about what I thought would be interesting about decentralizing finance and about what you could potentially do, but there's kind of what can theoretically be done and what can realistically be done with what's available, if that makes sense. Like, as soon as they always talk about Turing complete computers, as soon as the concept of the computer was eventually, theoretically, you could have like Call of Duty. But throughout the 1980s, you couldn't have Call of Duty, right? There was no capability that was going to allow games of that fidelity. And so this was kind of how I felt about the blockchain stuff. I was like, all these things you could theoretically do, and they would be great, and I would like to work on them. And then we have Ethereum, and it can only do 20% of those things. But it was talking to Ramsey and the guys who ended up founding Chainspace and, going on to found NIM and a bunch of other projects as well. But talking to them about the research they'd been doing and the things that I'd been interested in and that Ramsey had sort of been pushing me on, and he was interested in as well, we sort of realized that by doing this kind of app chain thing, which I don't think was called an app chain at the time, but by doing this kind of application-specific blockchain, by using proof of stake, by looking at some of this research was out there, you could do these things that I thought you couldn't do. And you would have to build a chain yourself, and you'd have to build a bridge to Ethereum or some other chain, and a bunch of things you have to do, but they were not purely theoretical. They were just quite hard. And so that conversation eventually turned into some prototyping and some, we were sort of asking questions about what to do with the other startup I mentioned, and sort of not failing to raise money with that. And we sort of delivered an MVP, a prototype. It wasn't going where we wanted, and able to make that into a longer term, bigger thing. And we sort of eventually pivoted through, ended up, my co-founder from the other business came and joined us, and is still here at, on Vega as well, and ended up sort of prototyping and building and deciding to create Vega then. So it was really, talking to Ramsey, his conviction about the sort of similar things to mine, his interest in the same things, and then, talking to Dave and George, who were sort of the main researchers on this. They were at UCL doing this research before they founded Chainspace, and talking to them and generally just working out that actually the things I was thinking of were possible.
And then, so you were going into entrepreneurship a little bit, but was that something always like a burning desire in you when working?
I think so, yeah. I mean, I don't know whether I knew that it was going to be like, I don't think I knew whether I was going to like run the company or found the company, whether I was going to just join something early. I think it sort of depended to me what it was, like and who it was. Like, with my previous role, I'd been sort of a capital markets, financial services consultant, done a lot of this technical work kind of for a very large consultancy called Accenture, and then, a senior executive I was, very close to, ended up moving to a smaller company called Capco, and we had about 65 people in the UK when we did that move, and even that was kind of, on the promise and the idea of growing a business, sort of an entrepreneurial idea, but I was obviously a much smaller part of that, but there was that interest there, and it sort of just turned out that I when I decided I wanted to leave that, I couldn't find anything else someone else was doing that was exciting enough before I ended up finding sort of something with my friend Ed to do, and ended up sort of being an entrepreneur that way, and then meeting Ramsey. And but I do think I'd thought about it a lot. I'd spent a lot of time reading sort of books and posts by entrepreneurs and people like Paul Graham and stuff. So I'd sort of been immersed in that sort of tech scene and Silicon Valley scene and stuff, even even before then.
You mentioned Paul Graham. He's definitely someone to read up on if you haven't heard of him. If anyone's listening. Now that you're starting to get this idea for Vega, what was the beginning idea, white paper for Vega, and how close is it to being the same today?
It's actually really close. The beginning idea was order books are important, or something like them. So you've got this sort of the AMMs that came along with Uniswap, and they're a very neat solution to a technical problem, and they're also a neat solution to a financial problem. So the neat solution to a technical problem of Ethereum can't run an order book, and they're a neat solution to a financial problem for small markets. Like if you have a very small market that you're just creating and no one really particularly wants to provide liquidity, then having an AMM where you don't have to sort of you don't have to do any work to provide liquidity is good. But if you are building a real marketplace, then trying to algorithmically determine the price rather than allowing the market to sort of use orders to actually determine the price is not very efficient, and leads to losses and inefficiencies. And you see this in Uniswap v3. People are the people who make money are the people who actively move their liquidity around based on the market price for the thing. So they're kind of emulating order books at this point. So that was a big part of it. We need on-chain order books, and we need to work out how to make them fast. we wanted to make it programmable and permissionless, so anyone could create a market, and eventually anyone could even design their own products. And that's still the goal. We don't have the design your own products in live yet. We have the create your own market, but we don't have the design your own products. But yeah, those things are still the same. Obviously, we've learned a lot and gone deeper on the design of many of the things, but matching engines and order books are very, very well understood, and margins and closeouts and all those things. So most of that stuff is pretty standard. It's standard finance. It's well understood. Not much has changed there. The things that have changed and evolved are things like it's the liquidity protocol. We made a change towards the end of last year to the liquidity protocol to make sure that it was more attractive and better suited the needs of market makers and enabled them to manage risk better. So we've been learning a lot, and adding features to the list of things we want is probably the main way it changes. Like, you discover that you want hybrid liquidity, you want more types of Oracle, you want a bunch of different things. So features get added to the roadmap. But in general, like if you read the white paper now, you'll find that it mostly describes what we either have built or will build soon. We'll probably do a refresh, like a V2 white paper once trading's live in mainnet and stuff, and once we're starting to think about the kind of big V2 upgrade, maybe like for next year. So sometime later in the year, we'll probably do a refresh of the white paper, but it's still pretty much holds true.
And now that you're in the crypto industry for a while and building on it, what is a crypto pet peeve that you have?
Wow, where do you start with that one? I mean, I think there's a whole industry of sort of cynical, very sort of price action based, very not very connected to fundamentals. There's a whole thing that goes on around tokens and stuff, and you sort of get people. Tokens, the whole thing is people get tokens for a discount, they launch. It's not even the things that aren't intentionally like a pump and dump. There's like such an industry of supporters of kind of, in quotes, people who say they're VCs and people who support this whole thing. And there's just not enough honesty, I would say, even between often like quite technical founders and people doing really good stuff as to what's going on. And it sort of has led to all kinds of distortions. And I think many of those distortions have been playing out the last few months. And
yep.
There are a few problems with that. One is that you end up having to be part of that industry because you can't. You have a token and it's in the ERC20, and everyone from exchanges, whatever, is playing that game, and so you have to be associated with some of it just by sort of by name and by brand recognition of the whole industry. It causes people to think more negatively of the space and to think more negatively of the goals and ambitions of the people doing stuff, and then every so often it breaks really spectacularly. So I think, that whole thing, I think it would be great if people were, certainly pre-2017, there was much of a different sort of attitude around some of the projects and the way people raised money and thought about the industry, and I think it was healthier back then. Not that it's necessarily easy to go back, but certainly some of that stuff in the last couple of years has been difficult.
Yeah, and being in crypto for so long, it's just, you see the evolution of the industry and how humans act around it. In the beginning, in 2009, 10, 11, 12, 13, it was all about, let's build a new money together and be more of a cooperative global system. In 2017, it became big into just raising funds and ICOs and who raised the highest ICO amount. And then I think almost most of those projects are gone. Like, I can probably name a handful.
The phrase I would say that always peeves me is probably when people say everything moves fast in crypto. And the reason I think it's mostly a nonsense phrase is like, it's way simpler to build like a not very interesting, project that's not going to last long, or a scam, or, anything like, or do a pump and dump. They can do a pump and dump in 0 minutes. You can do a, well executed scam probably with a week or two's work, and you can build a project that might get a bit of temporary traction and then fade away with a few months work. And then to build, whether it's build Ethereum or build Bitcoin or build Linux as the open source operating system, or build quantum computers, like things that have lasting impact on serious stuff take time. And so when people are saying everything moves fast in crypto, what they're really saying is everything that anyone is paying attention to right now is kind of the simple stuff, and often that's the stuff that's a little bit less, a bit more disingenuous. And so, yeah, so sort of, that's kind of where you get to with that stuff. And I think it's been, it's kind of interesting. People would, on the one hand, sort of say, why does it take so long to do X? And then on the other hand, you look at Ethereum and how long it takes to get to proof of stake. But actually, you get there and it's worth it. Like these things are hard, and doing them right is, you have to be careful because people can lose money and all of that. But when you get there, it actually changes the game. And I think that's something people lose sight of because there's 20 projects that 10x in the last week or whatever, and that's it's not so great.
I wonder, I wish, now I'm thinking about this, I wish there was a way to create a smart contract that was linked to the product's roadmap. Therefore, the funds that was collected could only be unlocked to the team once they accomplish a milestone. And if not, it would be refunded to all the people.
I think that's actually a really good idea. I think, and I don't know exactly how it would work, but I know, I have a friend who's building a house, and you can get a mortgage to build a house. But the way it works is they don't give you all the money out front. They're like, okay, cool, we'll build the foundations, and then we'll give you some more, and then build the walls and put the roof on, then we'll give you some more, and do the plumbing. And so you kind of end up in this situation where you get enough money to complete the next phase, but if you turn out to be incompetent, you don't lose all the money, don't lose all of your investors' money. And it's a really interesting idea to kind of say, well, actually, can we create some milestones? Or, I guess the default answer would be to use a DAO somehow and basically say, well, the token holders vote on whether or not the money can be given out. But it'll be difficult to do it well, because people might suddenly decide that other things are growing faster and they no longer want to honor what they committed to. It would be really interesting to work out how to do that in a sort of fair way, because you both want to allow the investors to get their money back if the project fails, before the project just spent it all on cars or whatever. But you also want the project to have some certainty that that they're going to get all of the funds if they actually do hit their goals. So that's a really interesting thought. I like it.
Maybe I'll try to get someone to help build it with me. I'm not a developer myself, but I guess now's the time to build in the bear market.
Yeah, and I certainly think the idea of being, I think one of the sad things is that laws that were intended to do good, things like security laws, effectively killed the decentralized ICO boom. You had no one thought about any rules. Everyone just said, you know what, we're going to do this project. We're going to create an open source community, and everyone can kind of buy a token for this much on chain. And it was kind of, for all its faults, it was sort of innocent and sort of okay in a way. And that sort of got killed off by securities laws. And instead you got this kind of house of cards of jurisdictions in which things can be done, and companies that know how to navigate it, and companies that can list things, and companies that can, the VCs that can invest and have a fund in the right place. And so you sort of replaced this kind of decentralized, open, democratic thing with something else. And I think it would be nice to see fundraising evolving crypto again, because I think going back, just turning it into the same VC model as tech has always had doesn't seem like it's the best place. Yeah. I think it would be great to see something more democratic and more open and more fair. Yeah,
and things like that we have today, like Gitcoin, are pretty good, and different types of quadratic funding are pretty helpful.
Yeah, I think Gitcoin and some of those sorts of experiments are really interesting, for sure.
Now that you're working on Vega, and you're building, and you're kind of transitioning to a regular daytime job, corporate job, to entrepreneurship, living your own life. What is going on through your mind? How do you kind of keep sane in the crypto industry that's running 24/7, trying to figure out complex problems that really are kind of new? And what do you do kind of to keep sane in that space?
Yeah, the complex problems are the interesting bit. They probably help you keep sane, to be honest. I would say that the weirdest thing is in a way, before I raised money to build Vega, I was very in crypto, in that I was putting small amounts into a bunch of different things. I was reading a lot about every project, even things unrelated to things I ended up working in. I think when you actually start a company, you sort of have to quit that. You can't do a really good job at something deep and incredibly complex and committed, and also spend all your time on Twitter learning about every project and looking at its code. Like, I used to run like every type of node for a new project I could. I would go run the node and configure it. Like, you can't do that and build something like Vega or pretty much any business. So the first thing was probably like not really participating in the group chats and the sort of the community around just crypto in general, being much more selective. And then, I think working with good people and working with people you trust is very, very important, and having a good relationship with those people, and then occasionally trying to find like a mountain to ski down or hike up or something is always helpful. And then just making sure you see friends and family, and spend a little bit of time occasionally away from the computer screen is healthy, but how much time you get for that depends.
Yeah, and it's funny you mentioned skiing, because the first introduction to Vega that I had was going to ETH Denver, and the last day they were raffling off skis. So I just put my name in the raffle, and I actually won a pair of skis. And that was like super surprising to me, and there's a picture up on Twitter somewhere about that. So that was a lot of fun, and thank you for that raffle.
Oh, so very, very glad to hope they've gone to a good home. Have you skied on them yet?
No, I have to put the bindings on, and I'm currently traveling, so. But
it's nearly it's probably just about the ski season coming up again. So maybe I'll see you on the slopes in Denver.
Are you going this year in ETH Denver?
I'm not sure yet. Depends on a few things around our launch and what we've got going on. But if I can, I'll be there.
Nice. So for the people who are listening and still kind of asking, so what is Vega, and kind of what are derivatives, and how is it being solved? Could you give a explanation over that?
Yeah, the easiest way to think about Vega is like, if you're in crypto and if you sort of understand the crypto, because obviously, a lot of the people I explain Vega to might be in traditional finance, and they may not get any of this explanation, but it's just assuming you're sort of in crypto, like, and you can see things like BitMEX was probably the first with their futures. I think FTX obviously previously used to have a lot of futures contracts. Binance lists them, so a number of other exchanges. The simplest way to think about Vega, if you're a user, is probably to say it's a network that enables people to have a completely decentralized version of that. So you basically have a futures exchange that's a DEX, more like Uniswap in terms of being decentralized, but its features are more like a centralized exchange. So you have an order book, you have a front end that has graphs and everything. It's kind of like a decentralized version of those things. The other exciting thing about that is that means that and DYDX tries to be that. DYDX I think is currently pretty much less decentralized than that. Like they still decide what markets are listed. Their order book, I'm not sure if it's currently partly on-chain or entirely off-chain. I know they're building V4, which is going to be very similar to Vega from the sounds of it. I'm sure they've been looking at some of our code. Who knows? But certainly their V4 description is very similar to Vega's. So DYDX are slowly kind of moving in that direction. But I think Vega's one of the first attempts to build a completely decentralized futures exchange, enables community to create their own products. Community liquidity provision as well. So a lot of time on central exchanges, and even some of the decentralized exchanges, the LPs are kind of market makers who have a contract with the exchange, and there's some backroom deals, and they get paid some money. In Vega, all of that stuff is like opened up and decentralized. So if you have the ability to market make and provide prices on an exchange, you can connect to the network, and you can see what the rewards that are getting paid and what the fees look like, and you can participate in that equally alongside everyone else. So really, that's probably the simplest description.
Nice. And now I know, like, being in a bull market is exciting. There's lots of money flowing around. But now that we're going into this bear cycle, is there any positive outlook that's coming from this bear cycle? Do you feel like you have time to just quiet down and build and solve complex problems rather than listening to noise?
Yeah, I mean, I think, obviously some of the stuff which we talked about before as being, pet peeves is amplified in a bull market, and money flows around. You sort of, people want to partner with someone who's offering 20% yield or this or that. Everyone is very excited by all this sort of shiny stuff. Half of it's unsustainable. I think what's been exciting about the bear market is people have started to look at the technical protocols, look at things and say what has a chance of, maybe they're looking for the next bull market and saying, well, if it's 2 years away, what's being built now that is technically interesting enough and useful enough that it might still be around in 2 years. But for whatever reason, people are actually more interested to come and talk to us and partner with us and build on us now that some of the other stuff has been sort of exposed as not sustainable than during the bull market. So I think a lot of those things have become easier. And certainly the other thing that's positive for us is that the recent debacle in FTX has really shone a light on kind of the need for self-custody. I think, if it's a centralized exchange, you probably want it to be really well regulated because you have to trust these people with your money. So if you actually want to use centralized finance, you probably want to use the traditional finance system and have regulations in place to protect you. And if you want to use crypto and you want to be decentralized, you probably really want to, have your keys, have your crypto, have control over that self-custody. And so I think, that's been helpful for us. It's probably been a painful way for some people to learn that, but that's definitely been helpful for our case to be made because it's sort of come at a good time.
Exactly. Whenever anyone, like friends or family or anyone, comes to me saying, "Oh, look what happened to FTX. How do you feel about crypto now?" I'm like, this is exactly what crypto is solving. This is the problem. Centralized exchanges that aren't regulated. I feel a little bit better
that they are being exposed, to be honest. I think
exactly.
It was, and it's kind of interesting. You sort of ended up in this place where people could do some regulatory arbitrage, set something up offshore, use crypto assets as a means to move the money in, and then basically just try and build their own version of what we already have in centralized finance and siphon money off that way. So for that to come to an end is not such a big problem.
Exactly. It's kind of like relieving, okay, back to the bare bones and true essence of what crypto is.
I think the hardest thing is obviously a drop in interest means that people who might be interested in what you're doing and the protocol might not be looking anymore, and so maybe you're launching and growing could be harder. And then also, raising funds is going to get harder. So, at the time when projects, including Vega, get to the point where they need more money, that's going to be harder to do. So it means, you've got to make sure that you can stay alive for longer and that your sort of default is that you're going to be alive in 1, 2, 3 years' time rather than maybe being able to rely on sort of cash flowing around more freely.
Exactly, yeah. There's definitely a runtime now where the projects that survive the bear market and make it to the next bull will really have a strong liftoff. So now that you're building, you're learning, you're in the industry, what is a wholesome crypto moment that you've had, something that made you feel good and proud to be part of the crypto industry?
It's a good question. I think I think you see a lot of, despite all of the kind of negativity and stuff, I think you see a lot of sort of kindness and altruism, and you see a lot of people in crypto helping each other, even within between competing projects. I'm trying to think of the exact sort of example, but there was certainly a time when I can't remember off the top of my head. My mind's gone completely blank, but there was certainly a time when I saw someone or a project was sort of in need of something, and saw a bunch of people go out of their way to help them, hook them up, make sure they have what they needed, and really do stuff. And I still think that's really true. The openness in crypto between people. We think about all the stuff that's gone bad in crypto recently, but when I think about traditional finance, the amount that people hide and keep themselves, the lack of knowledge sharing, it's kind of crazy. And now in crypto, everything is open source. Everyone gets to reuse stuff. People help each other. So I think that's been really, really good. And seeing, within Vega, we had some people who are moderating our community, for instance, in Ukraine, and seeing how the community and the team, responded to that and helped them, and the difficult stuff that's been going on there. But just seeing, the crypto community look after people like that has been really, really great.
Absolutely. The community is one of my favorite things. It's because if there's someone truly in need and mean well, that they'll get some help probably. the crypto community is really helpful in that sense, and especially with the rise of NFTs. Some of them are just rug pull projects and are just trying to make a community of financial gain. But sometimes there's a handful of communities that really just want to create a public good and create a strong community that helps others. So I'm thankful for that.
Yeah, absolutely. And I think that's the art community, particularly like the art and technical communities of people, have been incredibly welcoming. And you even see things like some of the DAOs that have been created just to buy pieces of art or do things just for no other reason than to sort of give people joy and create interesting stuff. And some of the things that have gone on in the NFT community, people like Punk 6529 and others like that, there are people who just really are interested in creating a better future and sharing it with people and sort of pushing for things like that. And it's great to see that happen so often across the industry.
If crypto never became part of your lifestyle, what would you think you'd be doing right now?
It's a good question. I think I sort of started down the sort of startup-y path. So I think realistically, probably maybe I would be, doing something probably fintech related. I imagine it would probably be trying to solve similar problems, because I think the sort of problems of lack of innovation, lack of democratization, lack of opportunity that exist in finance. There are a few different ways to solve them, and I think crypto is the best hope and probably the most complete way to fix it. But I think if you couldn't do that, you could probably chip away at some of those problems with more traditional finance and technology. So I'd probably be doing that, and but I'd probably be trying to work out how to retire. I think crypto's got a lot of exciting stuff happening. I'm hoping that we can do some really positive stuff. I think if I wasn't working on things that were as exciting and meaningful, I think it would probably be like trying to work out how to, if not retire, at least how to make life really fun.
And that's the thing, like, now that crypto's here, I'm like, it makes so much sense. Like, what else would we be doing now? Like, it has to be crypto. Like, that's just the natural order of things, apparently.
Yeah, no, totally.
Well, Barney, I really appreciate your time today, and I'm really excited for Vega. Is there a place, like, where can everyone find you? Where can everyone find Vega? Where should they go to? What should they look forward to next?
Yeah, so you can find me at Barnaby with 2 E's at the end on Twitter. You can find Vega at Vega Protocol or at vega.xyz. The most exciting thing that's coming up, for anyone who knows Vega will know that we sort of did the token launch and then the restricted mainnet launch just around a year ago. Restricted mainnet was kind of like the pre-merge Ethereum proof of stake. It was kind of like build the governance network, get the staking happening, get everything moving, but it sort of without the risk of of people trying to do real activity on it. I think there's less than 10 issues left. You can actually check on GitHub. You can see the boards on GitHub, but there's less than 10 issues left, I think, now to be closed out on GitHub before we can make a release that should enable people to start creating markets and trading in mainnet. So that's going to be coming out really soon. We're going to run some things called mainnet simulations. Those are really fun for the community because we are working with real professional market makers who are going to provide liquidity on testnet. There will be really strong incentives in terms of Vega tokens for participating in these simulations. So basically being a participating trader, using the network. And the goal is to make something as lifelike as possible before it's real money, stress tested a little bit. We're going to run a couple of those on our testnet, and then there'll be some running on the testnet that the validators operate. And then while that's all happening, there will be things like governance votes going on that are required to kind of enable trading on Vega and to connect up more assets to the bridge and stuff like that. And once all that sort of gets finished and everything's looking good, there'll be sort of a final governance vote, and then people will start creating markets and trading. So really, really exciting time for Vega, because in the next probably about the next month or so, we will go from being kind of pre-mainnet in terms of the main trading functionality to actually seeing that live in the wild and giving people the opportunity to try it out for real.
Awesome. Excited for it. Thank you so much, Barney, again, and I look forward to your success.
Awesome. Thanks for having me.